Well, good evening, ladies and gentlemen. Um, Thank you guys for coming out this evening to participate in this trading seminar. So the chart that we're looking at here is BTC USD, and we can see that it has begun to turn negative, meaning bearish. So this is going to be a continuation of our last training. For those of you who might be new on the call, I want to bring your attention to what you're seeing on the chart, which are called candlesticks. So I'm going to zoom in and quickly discuss these candlesticks. So the Bitcoin trade has been bullish all day, and here at the top where my cross here is would have signified the top in all trading environment. All trading environment with JAFX. Not sure exactly who the exchange is that exchanges for US dollars, but just in case you're not certain of how Bitcoin works, there are many exchanges around the world that exchange Bitcoin into local currencies and also US dollar. You have CEXIO, there's a popular one in the US called Coinbase, and then there are others like Bittrex and Poloniex and so forth. So we utilize JAFX primarily in our team for all of our transactions in terms of our Forex trading. So Bitcoin hit a high of $19,526 right here at the peak. And I'm looking at a 5-minute chart. So each one of these candles would signify a 5-minute window. And if you look closely at the screen, when I go to the 15-minute window, you will notice that during the ascendancy, and from bottom left to upper right, we were holding a specific trend line. Every time Bitcoin hit that trend line, it will bounce and continue to be bullish in the upward direction. It will retrace a little bit, hit the trend line, bounce. Retrace a little bit, hit the trend line, and bounce. Now, one thing that you would have learned from your IML Academy in your back office, and I trust that you've been studying the IML Academy, is very important for your trading. When the chart is exhausted to the upside and it comes back to your trend line and it breaks down through the trend line, if you notice in this area right here, we had a candle that would have been very dark black, came down to about 18 to this level right here where my mouse is. And then they came in and they bought it all the way back up, hoping that it's going to go higher. But the majority of the buying had already dried up to this high. And if you notice, candle right here is a bearish reversal candle. What do I mean by that? Here is a bullish candle, bullish. Now, on the way up, we had more white candles than dark candles. Very easy way on a 15-minute chart to realize that we have a bullish pattern. We only would periodically have black candles when there's a slight pullback and then the buying comes in again. We go in the upward direction once more, little pullback, then so you can look at a chart and notice that it actually has a bullish pattern. Now let me zoom out to show you when Bitcoin actually, as they say in the stock world, break out. When did the breakout take place? Let me find the person who is speaking. Okay. All right. Got him. Okay. So since since last week, since our last training, I had put a trade on in Bitcoin in this particular account. You should be able to see that trade. It was a 0.20 lot size. The account is a $5,000 account, and the account is almost double at this particular point in time, because we came into this trade the last time around and we had agreed that Bitcoin was displaying some very bullish tendencies, and we stepped into the market when Bitcoin was 16,774. Now, when I stepped into the market, there was a decline, but the account size was large enough to sustain the decline. Now, if this account was not a $5,000 account, it could have gotten blown when Bitcoin had pulled back on the date that we stepped into the market. But since then, on the right-hand side, you would notice that, and by the way, this is a demo account. I wish it was real. You would have noticed that, hold on one second, guys. One second. All right. You would have noticed. Oh, okay, let me get that train of thought back. So a $5,000 account almost double in size. So you would have noticed that Bitcoin has been very, very bullish, going in an upward trajectory. Now I think that someone was trying to say something here. Let me make sure that's not the case. Okay, great. Now, so having established that we have a bullish pattern overall in Bitcoin, and how do I know that? If I zoom all the way out, the general trend of this entire chart is from bottom left to top right, even though you would have seen a peak and then a trough develop, meaning a major correction that took place. And I came into the trade somewhere around the area of consolidation. The consolidation was around 16,500 in this particular area here. As you can see, that green line denotes the area where this particular trade commenced. However, because one would not have known exactly where the trend would reverse to the upside. Now, there are a number of reasons why Bitcoin actually is bullish. One, since the breakout of Bitcoin from just in penny land, breaking into $1, there was not a very huge following, but there is actually a movement around the entire world. This is not like Amazon or Facebook or some stock that you might have Warren Buffett buying X number of shares and some other investor buying X number of shares. Bitcoin and cryptocurrency has not even officially hit mainstream yet, but as of tomorrow, that's the cover is going to be completely removed off of any hiding that Bitcoin would have had. And in any case, most recently, even prior to the last peak that we're seeing here around about 16.5, we've had Bitcoin in the news. But of course, we are part of a community that have spoken about Bitcoin. We do Bitcoin investing, cryptocurrency investing, ICO investing. But we just happen to be in a particular market where you can trade the Bitcoin against the US dollar in the Forex sense, which means that it provides certain levels of leverage. But I want you guys to be very careful, because when you have an account size that is too small, you have to understand the concept of loss. Now look, we have this major reversal going on right now. I have been in this trade. Why was I in this trade? Because around this pullback here, I noticed that we had some downward movement, and then we had some undulating ups and downs, and then the candles got very, very small. Then we had some bullish reversal candles. Again, here is a bullish engulfing candle in this area. Why is it bullish engulfing? Because the candle, the size of the candle, this guy right here, and my screen isn't staying, but the candle basically took out the exact same candle that was downward, and then the trend continued upwards. And just by looking at the chart, you would notice that there is way more white candles, meaning more bulls coming in, and this is coming out of a zone where we know it was bearish, and then the candles got very thin and the bulls began to take over. Now, when you trade with the trend, you have a higher probability of winning than you do losing. Trends typically take time to evolve. So if the market is just thrashing around, it means that it might have come out of somewhat of a longer term trend. Now we have a very long-term bullish trend, but notice that as the trend would come here, then the market will consolidate sideways to down to create more strength. That's called the relative strength index. So we had a pullback here. From the pullback there, then the market went higher. Now we have a pullback evolving. We don't know exactly how far it's going to pull back, but typically the market remembers levels, and I can say safely that where this red line is right here is a level where the market can potentially bounce. Let me zoom out a little bit. We could potentially see a touch and a slight reversal here. If it doesn't completely reverse, it's then going to go and test another key area, which is this area right here, to see if that area is going to hold. So I personally stay away from markets that look exactly like this. When the market reversed on the top, if I was in a stable place, not driving or at work, I would have taken a shot after I saw the first bearish engulfing candle, because the long black candle took out multiple bullish candles and then the trend continued downward. So I would have said, okay, let me wait to see if there's going to be a bounce, which it did bounce back up. There was a long wick here that indicated that there was some buying. Let me zoom into to be able to speak to that actually better. So here we were at the top. And let me get my pen. Let me get my pen to show you exactly what I am referring to. Okay, so here we had a price fight. That little T looked like the cross, meaning that at some point in time the candle was slightly bullish, but then because it became bearish, it left a wick in its wake, but it actually opened in the middle. And then because it went bearish, it also had a wick. So by the time it was finished, it looked like this. That's why that candle looks like that. So that means that there was indecision on the upside and indecision on the downside. However, because there was so much buying going all the way up, it indicates that there has been buyers exhaustion. Here's a good indication that the buyers will begin to get exhausted. First of all, we had a pullback in this zone right here. That's one. Then we had some buyers getting exhausted here. Some buyers came back in again. A little bit of exhaustion here. And definitely some exhaustion here. So the exhaustion was in so much of a succession in close time spans that it would have told some people, you know what, maybe it's time to take a breather, step away from the market, let it find its way. But because we know that the market is in a upward trajectory, why? Everybody and their mama is trying to get into Bitcoin. Everybody and their mama is trying to get into cryptocurrency. Their projections that Bitcoin is going to 1 million. Oh, it's going to go to 100,000. Right now, for me, let's see Bitcoin pierce 20,000. Then let's see it get past 25,000. Then let's see it get past 30,000. But if you have a very small account, let's say $200, you don't want to trade with more than a 0.02 at the most for 200, 0.01 at the most, in my opinion, for a $100 account. The reason for that is if you had an account, if you had 0.10 lot size trading this Bitcoin, that means you'll be getting dollar for dollar as Bitcoin rises. Now you see how Bitcoin can pull back from this price right here. Let me school you a little bit and let you know why some people are telling me that they're either getting their accounts blown, one, because it's too small and you're trying to go too big, and two, why you're getting scared. You really shouldn't get scared in Bitcoin if your account is a correct size, because look at this account. It's now showing a $4,222 worth of profits, right? And why? I chose to go long, meaning I chose to go the overall trend of Bitcoin, and I simply left the trade on. Never came back, never logged back into the account. No reason to. Bitcoin can ultimately hit 50,000. And dollar for dollar, this account will make money. Correct account size, correct lot size. This is not a training on IML Academy. This is a training on trading the charts. Now, we have the web analyzer, we have the harmonic scanner. All of these things incorporate the charts. Now, even the swipe trade incorporate the charts. So when you get an alert for swipe trade, if you get the alert immediately, you can step into the trade. But if you got to the alert late, you have to now use your basic knowledge that you've learned in the IML Academy as to candlestick charting and know, is my price entry, is the price entry that was suggested is close enough to an area of support if it's an upward trade, or is it close enough to an area of resistance if it's a downward trade? Notice, this was a sell trade. People who sold in this area here are making money as Bitcoin goes down. It's currently going down. It's currently going down in what I call consolidation. It's simply gaining strength. It's shaking out the sellers and inviting new buyers to come in. This is what trading is all about, buying and selling. Some sellers decided to come out while the chart was moving up because they didn't want to suffer any major pullback, which happens from time to time. So they started coming out, like I said, in this area right here. Again, more, then more, and ultimately many, which is the reason why the shorts have taken over. There is more selling than buying. So we have more painting on the screen in black than we have white. So let me clean up this chart. Clean up this chart and we can get into some more activity. So again, a 0.01 will be 1/10 of a 0.10, which means that you have more control with a smaller account. Because if, let's just say you have a $200 account. Now, Bitcoin is a high price Let's just call it a stock, or let's call it a commodity. Bitcoin is a high price commodity. You really should not be trading it with a very small account unless you have some skills to navigate in and out of it. Like, okay, it's definitely going up, so let me get in for the ride. You ride it a little bit, you hop off. I said it again. If your account is way too small, you cannot trust to stay in and go along for the ride because of things such as this pullback right here. Let me explain why. If you were trading with $100 and Bitcoin is moving dollar for dollar and your account only was $100, let me get some levels here real quick. Let me show you what I'm talking about. Let me get rid of some of these lines. Let me get rid of some of these lines. That's the price line. So let me get a color, different color to work with. You get blue. Okay. So here we have this area right here, 19,251. That level is 19,251. Let me draw a line. Draw a line right here. Guess that's blue, that's red. I don't know how to change my line color. It doesn't matter. Anyway, this is a line right here. 19,250 roughly. Okay. Now let's look for $100 at 19,250 to 19,350. I'll show you something right now why people are losing money if they have very tiny accounts. All right, that's $100 spend. If you decide to get into this market with $100, right? Now it's great that Bitcoin is popping. Let me get my pen. So guess what? You're here. You're making dollar for dollar, right? So you got in exactly at this point right here, okay? And you're happy because Bitcoin went up $100. You just made $100 because you got a 0.1 on, okay? Bitcoin went up another $100. You're happy. You're now up $200. Bitcoin went up another $100. You're happy. Bitcoin, you just made $300 rather than hopping off and being happy because you happen to be in a trade that was bullish. It was a big bullish candle, and you got in and you rode that one bullish candle all the way up to the top. All of a sudden, there was, now this is a 15-minute candle, okay, guys? All of a sudden, you may have to use the restroom or do whatever. Bitcoin pulled back just within 15 minutes. Bitcoin pulled back a little bit right here. You just lost 100. So you're now 200 profit. Then Bitcoin pulled back again. You're still using the restroom because I'm talking about over on this end now. This is the side that we're looking at. So Bitcoin is now down to this level. And the bears have taken over. And I must assure you, believe you me, I actually saw when this happened today. It happened like this. Whoop! One clean swoop. One clean swoop. It actually went down so quickly that the bottom of the wick is here. But your entry was here. Guess what? Account got blown completely. It's only $100. Now, if you had a 0.1 on, as opposed to a 0.10, I mean a 0.01, yes, your profits will be less, but there's more control. Because as you go up, and this chart reverses, yes, this is your entry right here. Well, actually, let me not say that. I'm sorry. You would not have lost all of your 100 until the Bitcoin would have gotten to this level here, because it has to, see, you're making 100 there, you're losing 100 here. Same distance, okay? It's distance that you're working with. You're making 100 in that zone, you're losing 100. Losing 100 means the entire account because you only had 100. Now, if you're trading in 0.01 lot sizes, it gives you more distance to travel with the chart, 10 times the distance. So Bitcoin could fall 10 times the distance. You will still be in the trade. Bitcoin goes 10 times the distance in the opposite direction. Of course, you're always going to be in the trade making money. It's just that you're going to be making money in smaller increments. But if you manage the size of the account with the appropriate lot size, then you have more protection in the opposite direction to your trade, because 0.01 is 10 times the size of 0.1. I'm hoping that you guys are understanding, okay? 0.01 goes into 0.10 10 times. 10 times. 10 times. So it gives you more space to operate. In other words, you could have come into the trade with a 0.01 here and ride the wave, make profits. And if the chart dropped all the way down to where you started, you can still sustain losses even way below the entire distance, 10 times the size that you can, if you use a, because 0.1 is too tight. Someone seemed to be snoring. Okay. All right, so let me clean this chart up. So this is actually a great time to be teaching. Now, the reason why I say that is because I'm not trading Bitcoin in the bearish direction. Now, of course, if I was at my computer and I saw this bearish reversal candle, I would have attempted to put on a small trade, like a 0.02, just because I know that Bitcoin is so strong to the upside. Because someone called me and said, hey, I was trying to short it today, and the trade went against me because it did not pull back like I thought it would. The smaller your lot size, the more time you have to react, because your losses will not be as steep. If your lot size is too big, you're going to sustain steep losses, just like you would sustain steep gains. You know, easy come, easy go. Slow come, slow go. So you have to find your balance, guys. I cannot tell you how to trade. You have to find your balance, but I can make recommendation. I can say, do not go with a lot size that's too large for your account size. Very small accounts under $1,000, from $0 to $1,000. Even IML recommend a 0.01 per $1,000. But I know that people want to grow a $100 account. Of course, 0.01 is the smallest denominator that we have. So we use those micro lots. Okay. Now, here is something that I must emphasize. When you're reading a chart, this red line is the trend line, the upward trend. And I said, notice that the price action respected the trend. Happens all the time. Right here, it bounced off the trend line. Again, it bounced off the trend line. But I want you to notice right here, this zone right here. There was a slight fight in that area, and the bears won. So the trend continued to the downside. Anytime you see a trend line break, anytime you see a trend line completely break, That area there is called a no trade. Do not take a trade. You really do not know what direction. There's absolutely no way, theoretically, any given study, there's no way to know what exactly is going to happen here. You might take a good guess, and put a sell in, and you would have been profiting. Or look at this right here. That was a bullish candle. It break back above the trend line. What if somehow there was an institutional buyer, big bank, because tomorrow the CME is going to be coming with the futures in Bitcoin, which I believe is the reason why this weekend we had a little bit more bullish action than normal. Here's another theory that I have. Remember now, Bitcoin is trading against the US dollar. On days when the US dollar is very strong, when there's a strong upward surge in the US dollar, even if there's a lot of buying in Bitcoin, the chart will not be as bullish. Notice that Bitcoin has been jumping on weekends after the actual currency market is closed because the dollar doesn't move its benchmark on Saturday and prior to the market open at 5 o'clock on a Sunday. So Bitcoin gets to have a free, unrestricted ride against the last price of the dollar. So buyers would come in and create this type of tsunami of buying. Of course, there's always going to be a retracement for strength, and then it goes again. Slight retracement, and here we had a lot of sputtering, which would give a good indication that this thing is getting ready to go and break in a negative direction, which it did. And like I said, this right here would have been for me to take a quick shot at it, especially when I see the black begin to paint. I would have gone ahead and put a sell order in. Nothing big, because you can have a quick reversal like many times here. If it continues, then you can add to it a little bit. Here we had a reversal, you wait, and now it continued. I always try to respect former areas of resistance or support. So this area right here, I would have respected, I would have gotten out of the trade right here. If you notice, let me now clean this chart up. I want to show you something. If you notice, this was an area right here where Bitcoin pulled back and it bounced and went back up, right? Notice what happened. Even on the downtrend, when Bitcoin fell, it bounced back to try to recover to this exact same area, and then it failed. But it did bounce because the price always remembers the same price zone on the way up. It always. If this continues to fall, we're going to see some tug of war in this area right here to match with this area here. You're going to see a little bit of action also in this zone right here. Now, if it's falling, it's literally going to fall very rapidly in this zone. It's an air pocket. It went up very quickly in this area here. At the same rate, it's going to fall right here. That's the reason why, if you have been trading this Bitcoin, you realize sometimes that, okay, it takes some time trying to work through this zone, and the minute it gets on the neckline here, you see quick downward action. And before you know it, the prices are significantly lower until it gets to an area where it can consolidate. Now, let me clean up again. Notice that the candles are getting tighter, meaning that the sellers are somewhat leaving. This is now an area where I will be looking, not necessarily to buy, but I'll be looking in this entire zone right here to see if I'll get candles that begin to look like this. Some spots of white. I'm not seeing any white at all. I'm still seeing black. This was a dark black candle that came all the way down here. It was hanging and it pulled back and it left a wick, very similar to this wick right here. Now here's a white candle beginning to develop. That means that we had an open, it went down a little tiny bit, and now it's moving up slightly. So if I zoom in, to this area, you'll actually be able to see better what it is I'm saying. See? Okay, so let me explain what happened here. We have, for bullish candles, they always open at the bottom. They go to the top, and then they close this area. It leaves a wick to let you know where price was at its highest. So it's open, high, it's open, low, high, close. OLHC. Write that down. OLHC. Open. What's the lowest price? What was the highest price? What was the closing price of the candle? This is a nice bullish candle because and it's a bullish engulfing candle because it completely took out the very previous candle in the opposite direction. It opened here. The low was at its open, so it never went any lower. The high was a small little wick right there. You can't really see it. And it closed in that particular area. Lots and lots of price pressure to the upside. This guy was the reason why this chart went higher. There was a lot of buyers. The buyers overwhelmed the sellers. So it went up a little bit more. But you have to take a wider look to notice that even though this was a lot of buying, it could be that there's some big boys who are fighting to make sure that they continue this trend a little bit more, because now they realize it actually is time to get out. But they had more, what we call it in the trading world, many forums. I forgot the term. I mean, like when you have a lot more money to utilize, so you can do more buying. Spare something they call it. I forgot the term. But in any case, see here, a bullish candle is developing. Of course, we don't know for sure if Bitcoin is going to get all the way back to its high. This is a strong bullish candle, but I don't particularly use this to get back into a trade that had a major reversal. I always try to find smaller candles indicating indecisiveness, but in a smaller, tighter range. And if it's slightly moving upwards and then you get a pop, then you know, okay, it looks like the buyers are now coming in and we are going up. Sure, this could signify that Bitcoin can ultimately not fall any further in the retracement. But I personally believe that we're going to still see some slight upward and downward action before we see any major push to the upside, because there are still sellers in this trade looking to make profit, and they're going to fight and fight and fight to ensure that their exit price is the lowest it can possibly be. So that's why a lot of the times you're going to see a lot of sideways and undulating action like that before the trend actually reverses. Let me clean this up and show you what I mean by that. Okay, so what I mean by that, just now you saw this candle reverse. Now we had a good idea that the candle was going to reverse because of this guy right here. It's called a hammer. I'll explain how a hammer works. Let me get my my pen again. Okay, this guy right here I forgot the name. I think it's a shooting star. Oh wow, look at that. I didn't get a chance to explain this because I wanted to talk about a wick. It reversed and it had a wick, meaning that it went higher and then it came back down. But then it went up again. So there's definitely some buying going on here for sure. But this guy is a lot like this guy. Buyers came in. See, this was hanging completely painted black, and the buyers came in and left the wick to indicate where the lowest point was, and it closed pretty close, and then it reversed a little bit, but then look at that, it went down. You're going to find this a lot when there is, just like when you're going up and you have to consolidate back to go further, it works in the exact same way in the reverse. When the sellers are at work, or when we have a bear market, even in between of a bullish market, what happens is this, you also get sellers exhaustion because buyers come in trying to buy the dip, which ultimately leads to a reversal. So what happens is you're going to get sell, 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 sell. Remember, they sold down to this area and buyers came in and bought all that up. It opened here, it sold down here, and it closed pretty much in the same area. But then it opened again, right around where it closed. It went down again, and the buyers came back again. To the point where it closed in this area, and then the bullish candle opened, because you see bullish opened at the bottom and closed at the top, where bearish opens at the top and closes at the bottom. Don't forget that. Okay, I'm going to say it again. Bullish candles open at the bottom and close at the top. Bearish candles open at the top and close at the bottom. Okay? That's why they paint the screen black. And they're going down, they keep painting, 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 and they're going up, just white. Okay, so here we have some really nice bullish action. But what I was saying was, we had selling, 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 right? And a good indication of buyers. I explained that in this zone, which then translated into a bullish candle because there were more buying, 2 candles in succession in this area here. Way more buying than there was selling, which ultimately resulted in upward action. Now, do you enter the trade right away? You can be a novice and enter this trade right away thinking that Bitcoin is going to go back up entirely. Before you know it, the trend reverses again and you're down. We still have a lot more distance from the top than just this one candle. So you should always wait for a confirmation. I personally do not like to trade just on one bullish reversal candle. You should wait for a confirmation. So account size matters, lot size matters, and you should wait for a confirmation because then you'll end up having a higher probability of success in your trade. I must tell you that I woke up this morning and I grabbed my phone. I looked at the Bitcoin chart. I was heading out to work and I noticed that there was finally some confirmation of a trend reversal. I'm going to show you that here in a second. So we were having some consolidation in this zone right here. The last time Bitcoin broke out, I actually caught it in this zone, and I didn't catch the top, so I ended up getting out somewhere here, and I missed this for a small trade. So Bitcoin was consolidating, and it was not a whole lot of buying going on. This whole area of consolidation was taking place for a number of days. And overnight, there was some nibbling going on that brought us back to the top of this channel right here. Then this morning, I saw this guy right here pop. I said, okay, let me see. Then I saw this zone. Then I saw this again. When I saw that and I realized that we were now above the last area where we began to consolidate, I jumped into the trade, decent size, and I actually kept the trade on. Now here I am looking at Bitcoin is really making a move back to the upside. It's possible that I missed another good entry here. Am I concerned? No, I'm not concerned, because actually when I was at work, look at my phone, I saw all of this happening. I saw all of this and I saw all of that, and I got out of the trade. I didn't get out of the trade at the top. I'm not an expert, but I got out of the trade roughly in this zone right here. So if I was able to get back in this trade even here, knowing that Bitcoin is ultimately going to be going higher, even if it continues to go a bit lower, I will still not have lost anything. Do you understand what I'm saying? What I'm saying is, if you manage to get out of a trade at a particular zone on the upside, and then there is some consolidation to the downside, and you're able to cash the trade before it gets back to the area where you got out, you would have actually made some extra money in this zone right here when it ultimately gets back to the upside. So you saved yourself some losses and you made yourself some extra money in the overall upward trend. And I'm hoping that that makes sense. I believe I stated it clearly enough for it to make sense. So I think that that's pretty much what I wanted to cover. If there are any questions, I'll take a few questions, but I've had a very long day. Like I said, up pretty early, had to get to work for 7 a.m., got off at 7:30. I do 12 hours plus the 30 minutes. And I started promptly at 9:30. So this is recorded for those who have missed it. Make sure you share it with others. I've spoken specifically about the Bitcoin chart because I think that the crypto space is the hottest space. There's enough training throughout IML on swipe trades, harmonic scanner, and all of these other tools. So I don't try to duplicate that. I don't think it makes sense for me to provide any training unless people have specific questions on these other tools. I think that the company does a great job. Mr. Boyd has good training on swipe trade. If you don't know where that training is, I'm going to try to locate it because I've heard him mention it today. We should encourage newbies to get onto the 72-hour fast start training. It's very important. I sat in on it this morning. Even while I was at work, had my earbuds in. Very, very good information. There's no substitute for getting the knowledge that you need to operate in this market. But I'm going to tell you guys something. I made a voice note to someone that I was having a conversation with. And I've never seen an opportunity where you can literally go out every day and manufacture money. Literally manufacture money. But yet, when you share the opportunity, the company also pay you some more money for getting other people involved. I've been in network marketing. I've tried a number of them over the years. And I really think that if you're on this call, just like me, you would have found your niche. Guys, let's strap up. Let's work together. Don't be afraid to ask questions of me in the chat. I cannot assume that I know what people are thinking. And if you have specific questions that I believe that I can answer, I'll answer those questions. This is a nice bullish engulfing reversal candle. Because we've come from a long way down, I'm going to watch and see if the sellers come back again and try to push this down a little, see if there's some more sideways. But before I close the call out, I want to bring something to your attention. Very important. We still have this trend line, okay? We still have this trend line. You know how to draw trend lines, right? Until the bulls are above this trend line, we really have not continued our ascendancy, okay? Some people actually would prefer to wait until they see this trend line break, which I did this morning. before they begin to get back into the trade. So overall, you want to trade the trend. Please do not force the trend. Please do not be overly anxious to trade. Wait for the trade to set up. You actually don't even have to trade every day. Now, the reason why I might look for a trade every day is because during the week, we have all these other currency pairs. And now while I'm speaking to you, notice that some sellers are coming back in. Yes, some people hopped on and made a quick little buck. Let me see. It went from 18,977 to around about 18. That was 18,977. Okay, right here. 977. So 977. 19,000. Okay, 19,000. 19,160. And the sellers came in and they're literally wiping out most of that candle right there. So you see what I'm saying? I prefer tighter candles for gauging an entry. You can't just trust this one big candle and say, okay, it's time to get back in, let's go. And you see, you say, oh my God, I didn't get in and it was here. Oh my God, I need to get in because it's such a big candle is going up. And guess what? You get in here at the top, your lot size is too big, and now you're being wiped out. I hope you're getting this. It's a no trade zone. It's a no trade zone. It's a no trade zone. You do not know for sure. We have not gotten above the trend line to have confirmation of continuity to the upside, and we're not tight enough. We're not tight enough with small little candles indicating that price action is very tight. Here we have a bull and bear fight. Here you have a bear raid. The bears came out in force. Bear raid at the top. That's what they call a bear raid. Here you just have a bull run. That's a bull run, a bear raid, and bull and bear fighting for dominance. That brings me to the end of tonight's discussion, tonight's trading. I think it's enough for people to get into the Bitcoin trade. There's lots of money to be made. Again, we're profiting $4,534 down here in the right-hand corner. This is the trade that was on for the past couple weeks, where Bitcoin was around 16,000. So all this trade is about is trading the general trend to the upside, because Bitcoin, as they say, is going to the moon. So you can actually be comfortable in this business if you are so fortunate to have a lot of money laying around. You find a really nice pullback, you put on like a 0.02, 0.03 lot size, and you just let Bitcoin rise. And as Bitcoin rises, you profit. That's another trade because you're trading the overall trend. Again, tomorrow, the CME is going to come with Bitcoin futures. I know I've been around the stock world. Sometimes they're gangsters. They'll come out and they'll try to shake people out by creating a sell fest straight out the gate. You see one big black bar, and then they'll rip it to the upside and they're gone. Breakout to the upside. Or they might just start slow and just continue the upward trend. You never know. That's why, depending on the size of your account in this particular space, you have to be careful to ensure that you have the right lot size for the account not to get blown out. A $100 move in a negative direction with a 0.1 lot size would clean out that account completely, and you probably would have some negative dollars that you have to make up in your account. Happens all the time. So that's where the academy comes in. You have to learn the fundamentals, but I try my very best in these trainings to give you sound advice. If anyone has any questions, we're going to do it in the chat rather than creating a stir on the line. You can type it in the chat, or you can raise your hand and I can unmute you. if you want to ask directly. I'll do about 3 or 4 minutes of question answers if you would like. So raise your hand. I'll put it in the chat. I'll wait around for a little bit if you have any questions. Well, I believe that we had quite a bit on that bone to chew on. I think you guys might want to be heading back to your charts to see if you can interpret where the next move is. Of course, I will give commentary in the chat when I think that Bitcoin might be looking to go to the upside again. I feel strongly that tomorrow we might have some upward movement because of the CME. But I also do know that sometimes you get the move before the activity, meaning that the move today could have been a psychological move where people came in, created the buzz was already created, and they took the opportunity for the trade. So tomorrow actually can end up being a muted day. So you have to look at all scenarios. But all I know is that right now, there's really no trade. This is sitting on hands, right? This means the trade was today when different people were posting and stuff like that, and the bulls were out. Thank you, Montre. Thank you all for coming, and I'll see you guys on the other side of success. I'm going to go ahead and close out the meeting. Have a great one.